Thank you, everybody, for attending today's webinar. We know these are very difficult times, so we appreciate you attending, and also regarding the information that we're going to be presenting in today's webinar, this is the most up-to-date information we have. As you know, things have been changing almost daily regarding this program and before the program was released. I think the reason they changed it so quickly, or they released it so quickly, is because they knew that people needed this support and they wanted to release the funds, and then they were going to adapt how the funds would be addressed as people received the funds and as they learned more about how people were using the funds and applying them to their companies. So today's webinar will be as informational as possible. We're going to present the information that we have as related to us, what the most up-to-date information that we have is. There's a lot of information that is still left for interpretation and will change, but we're presenting the information that we know today. If information changes, which it may, there's a high likelihood it could, we may present a webinar in the future, or of course anyone is always welcome to contact us, and we're always, open to provide as much feedback as we can. The agenda for today's webinar is we're going to be going over the PPP program, the Loan Forgiveness Program. We'll be talking about the staffing requirement, tracking expenses. Specifically, we'll be talking about solo self-employed entrepreneurs. And then we'll be going through some scenarios and then some questions that we received and we will receive during this webinar. Today's presenters are Eric Walder, he's a Senior Tax Manager at Wendroff & Associates CPA, and Rafael Martinez, the Vice President of Commercial Banking at Atlantic Union Bank. And we really appreciate Rafael being available to assist us with the webinar today. He's an expert in SBA loans and business banking, and he's been, I know, Raf, you've been working tirelessly working with these loans since the very beginning.
Yes, it's been quite a hectic few months, but I'm happy to be here.
Yeah, thank you so much. So I do have to give a disclaimer. This webinar is informational. We're presenting information as best that we know it now, because the information should change. It could change. This is not considered advice. So please take all the information we present as information and not direct advice or instructions on how to do something. Whatever information we present, try as much as you can to verify it or speak with your own advisors about the information. If we are working with you, we will speak with you more directly about your specific case. But just to put a disclaimer out there, this is informational. Regarding the changes that are happening with the loan, the good news is that they usually change or evolve for the better. But again, there is a lot of changing criteria regarding the loans, though we should have, a majority of the changes should have already occurred, and we should have a final product in terms of how the Treasury and SBA are going to forgive these loans. So to start off, we'd like to talk about the PPP loan conditions, and I'd like Rafael to talk a little bit about the loan conditions and requirements. But Raf?
Thanks, Darren. Appreciate it. Hello, everybody. It's good to be back here again with this group. For those that don't know me, my name is Rafael Martinez, Vice President of Commercial Banking Group at Atlantic Union Bank. And I'm going to be just a little bit more explicit in my disclaimer because of my position being a banker. As a banker, I cannot guide you or instruct you on how to interpret PPP. You made a certain attestation when you applied, and you will have to match that when you apply for forgiveness. My role here is to just give you a little bit more insight on the program, general advice, and kind of show you how banks will be processing the forgiveness through their particular channel. So happy to be here again and provide insight. And just to give you a little bit more background on Atlantic Union Bank and what we did in terms of PPP, we were able to process about 11,000 applications, which equal about $1.6 billion, and 65% of that was in round one. So we were definitely. Hey, Darren, are you typing?
Yeah.
Darren, it's a little distracting.
Yeah, sorry about that. No, I know. I'm sorry. I'm not able to.
Yeah.
Sorry.
Got it. No problem. I was having trouble. I'm not a good multitasker, so I apologize. So anyway, 65% of that was in round one. We got another wave of clients and new customers to Atlantic Union Bank through our second round, and we're continuing to see applications trickle in. So we're very fortunate to be ahead of it. It's an unprecedented time in our economy and for banks. Just the volume of that some of the larger banks had to process, some of the smaller banks with their internal bandwidth. But I'm happy to see that the banks really rallied to come to the forefront and lead in this process instead of kind of being the bad guys back in like we were in 2008, 2009. So with that being said, we want to do a little bit of a review on the PPP loan conditions. Please remember that this program is based on 2.5 times 2019 average monthly payroll costs. I have received a lot of inquiries about what PPP funds can be used for. Again, this is all explicitly written out in the final ruling of the program, which is available on the Treasury website, treasury.gov. PPP funds can be used for payroll, mortgage interest, rent, and utilities. So I'll repeat that again: payroll, mortgage interest, rent, and utilities. And we have a little bit of more detail on what that means: salary, wages, vacation, parental leave, family, medical, sick leave, health benefits, et cetera, et cetera, et cetera. And remember, February 15th is the big cutoff date. Anything after that doesn't apply for PPP. So that's what PPP funds can be used for. So the other part of this is the conditions. What happens? So from the moment that you get the funds deposited into your bank account, also known as the date of disbursement, 8 weeks of coverage kicks off. So from that moment that you get funds in your account, you have 8 weeks to use the money for eligible expenses. So the clock has been ticking. I have a lot of my clients that got funded in that first round. They're now a little bit past the halfway point, and they're looking to make sure that they can maximize their loan forgiveness. Keep in mind, we have a 75-25 rule. Of the loan, 75% of it must be used for eligible payroll costs. That's a must. The other 25 can be for additional approved expenses under the PPP program and the CARE Acts in general. The staffing requirements must maintain the number of employees on payroll. Pay requirements: you must maintain at least 75% of total salary. Sometimes it doesn't make sense. Some clients have had to slash salaries, and that's okay. But keep in mind, as the program is written, forgiveness will be discounted by the percentage that was deducted from the employee once they dip below that 75% threshold. And the last piece to remind yourself on is the rehiring grace period. The guidance is rehire quickly, but there is a deadline, and that deadline is June 30th in order for you to rehire employees that are eligible to be put into the PPP loan forgiveness application.
Eric, Raf, thank you very much, Raf, by the way. Rafael. Rafael, so one question we got, and I think we answered this later, but since we do, I just want to ask you a little bit early, is does it matter when the health insurance rent premiums were due? So like if they were due before they applied for the PPP program, do we have guidance on that yet?
I don't know that specific question off the top of my head, Darren, but I would refer everybody to the final ruling on PPP. It's a very robust document. You can most likely find your answer there. I'm going to try to get an answer for you during the course of this presentation. So I just wrote it down, but for the moment, I don't have an exact answer for that.
Yeah, I think we did research this, and I don't think they gave specific guidance on this yet. So just so you know, we don't really have specific guidance on that yet. So next, we're going to be talking about the full-time employees calculations and considerations. And Eric Wilder, our tax manager, will be talking about this. Eric?
Yes, thanks, Aaron. Hello, everybody. Thanks for joining today. This is a pretty difficult topic, I think, for everybody involved in this, and we're trying to make sense of it the best we can in an ever-changing landscape. Seems like every day. One of the biggest things that I've heard from our clients is this question about what is a full-time employee, and this is kind of at the base of a lot of questions we've had, because almost everybody that I've dealt with has had some sort of reduction in employees, and since that seems to be the common denominator for all of the forgiveness calculations, I thought it'd be really important to get into how the FTE, the full-time employee calculations are worked. Now, the PPP doesn't actually say what a full-time is, but the SBA does have some guidance on this. So any employee that works at least 30 hours is a full-time employee. Now, a lot of our clients in the hospitality, service industries have a lot of part-timers, and that's where it gets a little confusing, so we thought we'd try to sum this up. Any part-time employee that did not work more than 30 hours on average will have their average weekly hours worked added together. Divide by 30 to get your full-time employee calculation. For example, if you have 3 employees who consistently work 15 hours a week, altogether they would count as 1.5 full-time employee. Now, to do this, you actually do have to work, there's another level to this that has to be done first, and that's averaging out each employee's hours over that covered period, over that 8-week period. So once you've worked out an average per employee, then you can add those up, divide by 30 to get your formula for the full-time employees. Which leads us into, starting to get some examples and some calculations here. Determining the average number of full-time employees you had. So the full-time headcount during the covered period would be your A in our scenario here, the numerator. Now, from January 1st, 2020 to February 29th, 2020, you would calculate your average FTEs for that time period as well. Now, there are scenarios that I've seen that you'd actually use a different set of dates from January to April of 2019. There's a few different ways to do this. I thought I would just get one that would probably be the most common here and easiest to just kind of wrap our head around for a 30,000-foot view of this PPP program. So you take your average headcount for the covered period, which is the 8 weeks after funding, and divide that by the average FTEs, or the FTE calculation from January 1st to February 29th. Divide A by B, and that gives you your headcount formula. If it's equal to or larger than 1, then you have successfully maintained headcount, received full forgiveness, or eligible for full forgiveness on the payroll section. Now, if you drop below 1, you did not maintain your headcount, and forgiveness will be reduced proportionally, and we'll get into that with some clearer examples. Well, as clear as the PPP can get anyways. We'll get a little clearer than that.
Okay, yes. So let's talk about some examples, Eric, about how different scenarios regarding the employee headcount and forgiveness.
All right, now we're kind of getting into the meat and potatoes of probably, 3/4 of the questions we received here is some examples on, real world examples for people. So if with a $30,000 loan, 75% of that would have to be used for payroll to meet the covered expense eligibility for forgiveness, and then 10,000 could be used for a combination of the other covered expenses, interest, utilities, rent. So in this example, if 100% is used for covered expenses, all should be forgivable on this. You've met the 75-25 rule. Now, the head count during January 1st through February 29th was 10 full-time employees. In this situation, the business owner either had to let 3 people go or 3 people decided not to come back, which has been a very, very common scenario. So they only kept 7 out of the 10. So divide the 7, which would be A in our previous slide, by B in the previous slide, so 70%. So the forgiveness calculation of this $40,000 loan by 70%, $28,000 is forgivable in this scenario because of the reduction in full-time employees.
Okay, so let's go to the next slide. Oh, this is a question we get often as well. What if employees won't return? So we have received guidance on this recently. So Eric, can you talk about what if employees are not returning?
Yeah, this has been a very, very common scenario, and I'm sure several people on this call right now are experiencing this, especially with the pandemic unemployment assistance. A lot of employees are actually making more on unemployment than they were working, so they've turned down an offer to hire. And this was very confusing for a lot of business owners right off the bat because they borrowed this money, and just recently SBA has provided some clarity on this. Some clarity. It's not, they haven't completely cleared this up, especially the formula part of this, of how this is calculated. But if you make a written offer to an employee to come back and they turn this down in writing, document the employee's rejection of the offer. Now you are no longer on the hook to pay back the portion of the PPP loan you took for any employees that have turned down the offer. Now, how this calculation works, whether it adjusts your FTE calculation or if it's a dollar for dollar reduction off of the loan, I have not seen any clarity about that at all yet. I don't know if Raf has. I'll let him give him space here to comment on that if he has any. But one of the kickers here is that your employees have now turned down an offer to work, which immediately nullifies their ability for unemployment. So it puts employers and employees in a very precarious situation where you've made an offer, they've turned it down to get unemployment, and they're no longer eligible for unemployment. Now, I think this is really going to come down to how much the employers want to challenge that and chase that down, make sure people aren't getting unemployment. I really don't see that happening a whole lot, but it is some leverage that if you need people to come back, could possibly use to say, you don't get unemployment, I've made you a job offer, and you're no longer qualified. Now, Raf, I'll cede the floor to you. You may have some input on the calculations for the reduction. I haven't seen anything on that though.
No, not too much, Eric. To be quite honest, it's certainly a program that's fluid. I mean, we've had 3 FAQs on PPP already. Last one came out on the 13th of May. It's interesting. It's just a very fluid situation, and you're right. It brings up quite a dynamic there between the employee and the employer. But again, documentation is the key, and as long as you have this, this helps you navigate the process.
Yeah, the important part here is that they have said that you as the employer will not be on the hook for the wage, for the PPP loan. Now, whether you're, how that's going to be calculated, I do not know yet.
Okay, so let's go into some other examples. Oh, I'm sorry. You see something here. The slides. Sorry about that. The slide got moved a bit. Let's talk about the self-employed because the slide got moved a bit. Sorry about that, everybody. Let me move the slide back up here. Okay, so let's go back into the scenarios again. So this is a regular company scenario.
Yes. Now this is the perfect example that I doubt anybody listening to this call is going to fall perfectly into. This is kind of how it's intended to work if everything works perfectly, which probably not. So this company had 3,000 before layoffs, before the covered period. They had 3 employees making $3,000 a month each. Payroll was $9,000 a month. Times 2.5 to get their PPP loan amount is $22,500. Now over the 8-week period, they spent $18,000 on payroll. They had 8-week period, $9,000 a month. They spent $18,000. They spent the rest, the non-payroll expenses, 25% on qualified expenses, interest, payments, rent, utilities. They spent it all. They're eligible for a full $22,500 fully forgiven. Now, I say that this is probably less than 1 out of 10 that are on this webinar right now that are going to meet this. There's a lot of I've seen it's very hard for a lot of businesses to spend the other 25% on, especially if you're a self-employed personal services company. You might not have a brick and mortar office to spend rent on, and just not have that much. So be prepared that your loan amount is going to be, the forgivable amount is probably going to be reduced. But this was the perfect example right here if everything was fine. I don't see this happening a lot right now. If you're one of them, congratulations. Now the next slides will have some more common loan reduction examples. And I think you skipped one there, and this is a pay reduction. I think the first one is the employee reduction. I think you skipped this slide. There you go. Okay, so this one I think is the more common that I've seen, that either employees aren't coming back because they've making more on unemployment, or a lot of different reasons. But this is the most common one I've seen so far, is headcount reduction. Now this is a high level, once again, just kind of a general overview. I don't even think a lot of people are going to be this clean of a calculation, to be honest with you. I think most of the people listening are going to be even more complicated than this scenario. But same scenario, 3 employees, $3,000 a piece. The loan amount was $22,500. You had to lay off in February, and then you were hired 2 of the 3 employees back. So your workforce is 67% of what it was before the covered period. Now, over the 8-week period, you spent $12,000 on employees, which was 2 employees, $3,000 a month for 2 months, $12,000, and all the remaining funds on eligible expenses. Non-payroll expenses are limited to 25% of the loan amount, so $5,625 of that original $22,500. So, excuse me, take a drink of water here. So $17,625 of that original loan is eligible for forgiveness. The rest of that amount it wasn't even spent on eligible expenses, so immediately it's disqualified for forgiveness. It's some people are going to choose to just give that amount back. Some are going to take it as a 1% loan to use it on other non-covered expenses. But right off the bat, that amount wasn't even spent on eligible expenses, so it's not eligible for forgiveness. Now there's another step to this, and this is because there was a reduction in wages, there is a penalty for this. So only since 2 of 3 were brought back, there was a 33% reduction in the workforce. leaving 67%, rehire, you've got to multiply the 17,625 by the 67%. So only $11,808.75, almost $12,000 is forgiven in this. It's a
Yes.
Once again, this is a kind of a too clean example. I don't think a whole lot of people are even going to be this clean. And even at this stage, it's already confusing.
Yes, the examples that we're giving are very simple, but yes, we understand that everybody's company is unique. So we can address those specifically if anyone wants to talk about their company situation specifically. But yes, these examples are just meant to give an overview of how the forgiveness would work. So next we'll be talking about pay reduction if you were to reduce pay for employees.
Yes. Now this one I haven't seen is common. People are bringing most people back at their pre-COVID wages, but there will be some like this. I'm sure there's some people listening to this. Now, same exact example, $22,500 loan. You've hired everybody back, but only paying them $2,000 a month. Over the 8-week period, you're spending $12,000 on the employees and the rest on eligible expenses. Now, it's the same amount as the previous example. You're still spending $12,000 a month on wages. The remaining covered expenses are the same. Non-payroll, still limited to 25% of the loan. So you spent the same amount of money, $17,625 eligible for forgiveness, not the full $22,500. Now the 75 minimum salary, so to avoid a penalty for payroll reduction, you have to at least pay them 75% of what they were making pre-crisis. Now in this example, the 75% is $2,250, and you're paying each of them $2,000. So it's been a reduction below the 75% of $250. So $250 would be deducted from the forgivable amount. So repeating that for each of the employees would result in a total of $16,825 forgiven. So there's actually more, even though the pay total that you as the employer are paying out to the employees is exactly the same, $17,625. The penalty for reducing wages isn't it's not exactly a penalty, but it is slightly punitive here. That it's not as bad reducing the wages below the 75% as it is to not bringing people back. So you can have the same amount put out by the employer, but two totally different numbers for forgiveness.
So Eric, we had some questions here from people in the audience. One of the questions was about payroll period. Can I use the payroll period dates used when the paychecks are received, or does it have to be 56 days immediately after I receive the funds?
All right. So there was just some clarity on this. Because pay periods aren't going to match identically, almost never, to when you get funded for this, the SBA has provided some clarity on this, and they now have an alternate payroll date. Let me see if I can find what the name of it was here. I can't find it right now. Anyways, the SBA has come out and said, okay, if you get funded on the 20th of the month, but your payroll isn't running until maybe the 28th of the month, so you're going to be very difficult now in that 8-week period to fit as many payrolls as you possibly can in it, and you are not allowed to do prepayments on anything. So they've now said, tell you what, you got funded on the 20th, your first payroll isn't until the 28th. The 28th can now be your funding date for the covered period, so that you can, capture that as much payroll in that time period as possible. They've kind of expanded on the safe harbor rules for this, which is great. It was a very good thing to do.
That's fantastic. That's a good point, Eric.
So we had several questions about if paying a 1099 contractor counts toward payroll.
Is this for me?
Yes, Eric, for you, yes. Does paying a 1099 contractor count towards payroll, or you or Raf can answer?
No, it does not. 1099s do not count at all for any of this, because as a 1099 contractor, they're self-employed and have their own business, and they do their own PPP loan and their own calculations and their own forgiveness calculations. So that won't factor in at all. This is purely W-2 payroll employee wages.
Hey, Darren, just to piggyback off of that, you're absolutely right, Eric. 1099s are not a part of this. That realization has been slowly coming. I think most folks knew that, but some folks either didn't want to accept it or are now coming to grips with it. So we're starting to get a second wave of self-employed contractors reaching out to us for PPP. Again, if you're an independent contractor, 1099, self-employed, you are eligible for PPP.
Okay, great. Now another question: as an LLC or sole member paid as an S corporation, can my health insurance be forgiven?
Absolutely, yes. That should have been part of the initial PPP loan calculations. Any, if it's paid by the employer, it's a forgivable expense and considered part of the 75% payroll expense.
Raf, we have a question for you. Do you have any sense of when forgiveness approval will be granted?
No, not yet, but I can shed a little bit of light on the process. That's really kind of my value add for today's seminar. So our bank, Atlantic Union Bank, we have a full PPP forgiveness task force created. We're going to stand up a portal similar to our PPP application portal that should go live towards the end of next week, kind of a one-stop shop. You'll be able to download the applications, submit all the required documents. So most banks are going to try to streamline the process as much as they possibly can, understanding that early June 7th is probably around the first period where people will start asking for loan forgiveness is coming quickly. So banks will try to have this stood up. Our bank, again, banks cannot give you exact explicit guidance. This is not a bank loan program. It is an SBA Treasury combo program. So we always will defer to those guidelines on how clients are to interpret the program. And then again, document. So get your documents ready. Most banks again will have a stand-up portal for forgiveness where you will be able to do everything streamlined through an online application. But it is not
okay, Raf. Sorry, Raf.
Go ahead.
Well, I was going to say, in terms of still applying, are people able to still apply for the PPP loan?
Yes, PPP is still, you can do that through the end of June. Again, we're getting a second wave, mostly these 1099 contractors who may have been told incorrectly by their employer or who they contract with that they were included as part of the employer's PPP, but that's not the case. They are not eligible, so they are starting to apply on their own. A lot of dentists who are independent contract, a lot of medical practitioners who are physical therapists are reaching out and applying.
Okay, great. And then Eric, we have another question here. Are payroll expenses that are eligible for forgiveness still capped at $100,000 a year?
Yes, they are. Absolutely. So the original application should have been capped at 100, and the forgiveness calculations are capped at 100. That is my understanding. Yes.
That is our understanding as well. The all-in cap, which includes all eligible payroll costs, is $100,000.
Okay, great. Thanks a lot, you guys. Thank you. Okay, so next we're going to be talking about if you're a sole proprietor, that example. So Eric, can you help us here in terms of forgiveness, loan forgiveness for sole proprietors? How do they determine how much they'll be eligible for?
All right. So so this is kind of post funding here. You know, to do the for the funding, it was based on 8.5 weeks of net profit for the total. I'm sorry, yeah, 2.5, 2.5 months, 10 weeks of net profit to get the loan. Now for the forgiveness, self-employed individuals are 8 weeks worth of net profit. So out of that initial calculation of 10 weeks to get the loan, 8 weeks of that is business owner compensation replacement. So they're just saying 8 weeks of that is your compensation as the business owner, and there's no payroll to run for that. It's just owner compensation replacement. So, and I believe our next slide we have an example to go through some of this, but just to touch on it. So 8 weeks of whatever your net profit was for your calculation originally for your PP loan, that is just your salary compensation as the business owner to do what as you see fit with. That's your money. That's your payroll replacement for it here. So you can transfer that out of the business bank account and pay your bills with it. So as a self-employed, especially with no employees, it's pretty easy to calculate the 75-25 rule. You just take that money. It's yours. There's no payroll to run. Now the remaining funds can be spent on utilities, rent, mortgage interest, the qualified expenses, forgivable expenses. Now to claim mortgage interest, rent, utilities, you must have claimed or be entitled to claim a deduction for those expenses on your 2019 Schedule C. If you worked in an office space in 2019 and did not have a home office, you could not have claimed a deduction on your home mortgage interest. So if you're currently working at home now, you're not eligible to claim home mortgage. Now put this in here because this is kind of a touchy subject here, and we've seen it a handful of times already, that people had an office and they're no longer in it. So in 2019, you had a dedicated office outside of your home. You did not have you did not take a home office deduction on your Schedule C in 2019, but now you no longer have that office or that work share space or that region office, and you're working from home now. You can't now use that PPP money. It was originally based off of 2019 with your off-site rent. You cannot take that money and pay your home mortgage with it for it to be a forgivable expense. You didn't have that last year. You don't get to take it this year. Basically, the 8 weeks of net profit is what the SBA is giving you to make your home mortgage payment, not the 25%. It's in this scenario, this person's going to have their loan forgiveness reduced because they're not going to be able to meet the 25% because they no longer have that offsite rent.
So Colleen had a question. She said, if I have a home office, can I deduct a portion of my mortgage interest? Only if she claimed the home office in 2019. Is that correct, Eric?
Correct. Yes. If you claimed it in 19, nothing changes. You're going to be able to take that pay part of that interest. Now it's just interest. It's not principal. So, but you'll be able to pay some of your your rent, utilities, and mortgage interest with this because you did it in 2019 for to calculate your original loan amount.
Now, one other question, Eric, is are payroll expenses calculated before taxes and deductions for sole proprietors?
Say that again.
Are payroll expenses calculated before taxes? So are the payroll expense calculated before taxes and deductions?
a sole proprietor?
For a sole proprietor, yes.
Well, that question really isn't. The answer is no, but only because that question isn't really correct. So for a sole proprietor, it's just off of net income from your Schedule C. That's it, line 31 from your Schedule C for 2019. Irrelevant of taxes. Taxes have nothing to do with it. If you made $100,000 on your Schedule C last year, then that is the number that you would have divided by 12 and multiplied by 2.5 to come up with $20,833. Taxes aren't factored into that at all, because then you paid taxes on that on your 1040. So correct, just take net income after home office deductions from your 2019 Schedule C, and that is the basis for your loan. Now take divide that by 52, multiply it by 8. That's the portion you can take as compensation out of your loan amount. Very
okay, great.
difficult.
And then Eric, yeah, no, it is a bit complex. Eric, as a sole proprietor, does my home office mortgage interest count as forgiveness?
If you had it on your 2019 Schedule C for home office deduction, yes, you can take it factored in for forgiveness from your loan amount.
Okay, great. Thank you. So here's an example for loan forgiveness for a self-employed person. Eric, do you want me to read this one, or did you want to look over some of the people were asking?
No, go ahead. This is actually the exact example we used a couple weeks ago to get the loan, and it's a good one to see again.
Okay, great. So it's pretty straightforward. In this case, the person made over $100,000, but remember it's capped at $100,000. So they made $150,000 on the Schedule C. So the PPP amount was capped at $100,000. So their loan amount was $20,833. $100,000 divided by 12 months times 2.5, which was the PPP amount. So then that amount is multiplied by 0.75, which is the amount related to payroll. So right off the bat, $15,625 is forgiven in this example. It's very straightforward. Now, the remaining funds can be used for covered expenses, so eligible interest, rent, utility payments. But remember, these are things that either you have an off-site rental site or you have a home office that you claimed in 2019. So you had to have claimed the home office in 2019 to then claim those deductions in your PPP loan forgiveness proposal or application. Eric, Raf, was there anything else I was missing? Anything I was missing with that?
No, I don't think so.
Okay, great. Okay, so now let's talk about some required documents. Rafael, can you talk a little bit about the required documents, and Eric can talk a little bit about how to track expenses, but can you talk about the required documents that people will need when they apply for loan forgiveness?
Yeah, so Darren, as you alluded to at the start of this presentation, SBA just released their forgiveness application, which is 14 pages long. It's a doozy. I've been trying to go through it myself. So the key point here is everything that you're doing, every dollar spent needs to be documented and tracked. Document. I can't say that enough. And I'm just going to remind folks out there again, and excuse me for the redundancy, but this is not a bank program. Your banker will not be able to tell you whether or not you qualify for forgiveness. Your bank will not be able to tell you who qualify for forgiveness. The adjudicator of the loan forgiveness will be the SBA. And I'll repeat that over and over throughout the course of this seminar. Your banker cannot tell you whether or not you will be forgiven for your when you submit your PPP forgiveness application. The sole adjudicator will be the SBA. So the information that you need to have, payroll reports from your payroll provider, your payroll tax filings, your Form 941, income, payroll, unemployment insurance filings from your state, documents verifying any retirement and health insurance contributions, because those are all eligible as part of PPP. Verify eligible interest, rent, and utility payments, canceled checks, payment receipts, account statements, bank statements. Make sure you have all of that tracked. Copies of all the lease agreements for real estate and tangible personal property. Anything that you need to show proof during that 8-week covered period, you need to have it, and make sure you have it in a digital format. It's got to be clean. It's got to be legible. The bank will do a review of the documents. They're just going to make sure that you are including all the documents that are required, and they're going to send that on for adjudication to the SBA, and they will be the ultimate decider of whether or not you qualify for forgiveness. One thing that we've touched on very briefly was recent guidance that was given by SBA that they're going to take your word for it for loans less than $2 million that you had a financial impact, economic impact due to COVID-19. So they're not going to require you to prove that you had economic hardship due to COVID-19. However, you're going to have to document clearly, thoroughly, precisely how those funds were used in order to be eligible for forgiveness.
Okay, great. And Raf, regarding the documents in a digital format, let's say you already have some documents, you're using QuickBooks, those type of things. They're already in a digital format, but some documents are paper. Do they just scan them?
Yep, you'll need to scan them. I know folks are displaced from their usual electronics of the office. Adobe has a free app that you can download. It's a great little scanner where you can just take a picture of your document. It'll turn it into a PDF file and you can send that over. That's much better than taking a picture. Somehow the picture just always comes out fuzzy. It doesn't look right, and you don't want to have anything hold up your application from being processed. And remember, it's going into an SBA portal for final decisioning, so you want to make sure that all your documents are nice and tight. So again, I would recommend using some type of PDF format application to make sure those documents that you don't have a soft copy of readily available turn into a legible PDF or PDF alternative.
Okay, great, and thank you for that. We'll also send out that app that you spoke about in the follow-up email. So just so everyone knows, we're going to send a recording of this webinar. We're also going to send the PowerPoint slides, and we're going to answer the questions that we're asking in the webinar in the follow-up article that we're going to write after the webinar. So Eric, I'm going to ask you how people should properly track expenses, but I think you have some questions that were received that you would like to answer as well. So, but first, how should people track these expenses, Eric?
Well, if you're using a QuickBooks or an accounting software right now, I don't see the need for too many, really, if any, changes to it. Most of the documentation for forgiveness is what Raf just spoke about. You're going to have to prove the biggest one is your payroll amount for that time period. So if you're funded, on the 15th of May, you're gonna for I don't know, $100,000 over the next 2 months. By the 15th of July, you're gonna have to show payroll reports that you spent $75,000 on payroll, and that in and of itself should suffice. Now, obviously your accounting software and your books should tie to that as well, but I don't see any need to open up a separate bank account to track these exact dollars. You're mainly going to show your payroll reports, canceled checks for rent, mortgage interest statements from your bank. These documents just to prove these amounts that you're putting on the application. I don't see any need to really change your accounting software. I do have seen some people that want to add tags in their accounting software, so that they can run the report and kind of capture everything for their own edification really on it. But it's not, I don't see where it's going to be needed to prove it, to prove the forgiveness. You're just going to need the canceled checks, the payroll reports, and, to prove that you paid these amounts.
Eric, were there questions that you had that were sent to us in the webinar that you want to answer specifically?
Well, I think there's a couple in here that I see that I think we'll actually get to in our questions. So let's go through some of these common ones here first, and then maybe we'll, if I don't feel like we cover it, I'll get to some of these other ones.
Okay, gotcha. So these are the commonly asked questions. So these questions, by the way, we got several questions that were similar, so we combined them to try to answer as many people as we could. But for the first one, can I get PPP expenses forgiven and deducted from my taxes? Eric?
Right now, no. The IRS has said no, that there's going to have to be a book to tax adjustment on your tax return. You might show these expenses on your profit and loss statement, but they're going to have to be removed for your tax return. But Congress, we see some movement and some bills that are being drafted to override this, because if you, as a business owner, the intent with this loan was for it to be free. There's no fees involved, there's no taxes involved. But if the IRS says you can't, if you get $50,000 in loans, pay $50,000 worth of expenses with it, and then cannot deduct those $50,000 expenses, you just raise your net income on your tax return by $50,000, and it's going to be taxed. So they've essentially, by not allowing any business owners to deduct this, the default is they've made it taxable. So Congress, we have seen some movement that they're trying to override this, and I hope and I suspect that they will override this, and you'll be able to deduct these. I hope that's what happens. Otherwise, they miss the entire intent of the loan.
Right, and there's still an opportunity for this to change. This is just the current guidance, but everything has been evolving, and usually for the positive. Raf, someone asked, we had this question several times as well, can I prepay expenses such as rent and mortgage?
No prepayment is allowed for use of PPP funds, and that's in the IFRAN. It explicitly states that no prepayments are allowed.
Okay, now in terms of using the loan money for other business expenses, how does that work, Raf?
It's an interesting question. It's very gray. The intent is there for these to be used for certain type of business expenses. So maybe it doesn't fitly into the payroll bucket, but if it's working capital to keep your business going and moving forward, I think you can make a case that those are reasonable uses of the funds. Now, keep in mind, if it's not explicitly used for payroll and 25% for eligible payroll costs, it cannot be forgiven, and it will turn into a 1% loan that'll amortize over 2 years. So that's a quick burn rate right there. So you got to make sure you do the calculus to make sure you can debt service any loan that these unforgiven funds turn into, because you're on the hook. It is a loan. So be very careful on just taking out, using funds for other things that you may not be able to repay down the road.
Okay, gotcha. Now, Raf, I know that you can't prepay rent or mortgage, but do you have guidance on whether or not you can prepay payroll?
Prepay payroll? No, there's no prepayments of any kind, Eric, unless you heard otherwise.
No, absolutely not. I mean, it says pretty clear, no prepayments. Now, the only thing that I've seen that could be, fairly gray are bonuses. I've had a lot of people asking about bonuses, and I've kind of directed them that if this is part of your normal pay structure, like you do quarterly bonuses every year, you can show it in 2019, it was part of your PPP application, then yes, I would say you could calculate those. Now, I've had people say, well, we normally do a mid-year in July. Can I pay that now? I would say no. You normally do that in mid-year, and your 8-week period will end before that period. You'd be prepaying bonuses. That's bonuses is the only place I've seen where it gets a little gray. But as far as regular payroll, absolutely not. I agree with Raf completely.
Okay, so a couple other questions. In terms of paying the bills versus when they are due, like, can you pay bills that were past due, but then you receive the money? So, Raf, for example, someone had a bill due in January, but now they're paying it in May because now they've received this funding. Will it still count?
I don't think so, Darren, because it's before. Well, I don't know the answer to that. I would refer that person to the Treasury guidelines on the program. I don't know.
Yeah, and right now it's still not clear, but what is clear is prepayments aren't clear. So they may apply the same criteria to post payments is probably not the right word, but they may apply the same criteria to bills that were due prior to the funding being received. But they have not specifically given guidance on that specific thing if you had a bill due prior to receiving the funds.
Right, the thought process is that we were looking at 2/15, right? February 15th is when really this kind of started as an issue, COVID-19, right? So prior to that, if the bill was from January, you're delinquent, maybe, but I couldn't opine on that one way or another.
Okay, gotcha. Eric, can you talk about how you would pay yourself as an LLC principal, sole proprietor?
Yeah, I'm going back to a few slides ago that just to reiterate this, that once again it's based off of your 2019 net income. That should have been used. That should have been the basis for your loan application. Taking that net income divided by 12, multiplied by 2.5. Now over the course of the 8 weeks in the covered period of the loan after funding, you've got to take 75% of that out as owner's draws. Just simply transfer that average monthly amount from 2019 that you use for your calculation, transfer that out of your business bank account into your personal bank account, and do whatever you want. It's your money at that point. So that I think that's one of the simplest scenarios of all businesses, but also one of the ones that's probably the least talked about in the PPP program, and it's daunting because that's by far the most common business out there, are sole proprietors. So we get that a lot, but don't overthink it. Take whatever your average from your Schedule C was last year, your net income divided by 12, multiply it by 2. That's how much you should be taking out of this loan for your compensation.
In terms of, and we've seen this question several times in terms of the registration, but in terms of if your business isn't struggling right now, but you do know because of the outbreak that you're going to be struggling in October, November, December, are you still able to get loan forgiveness? How will this affect companies in that situation, Raf, Eric?
Go ahead, Raf.
Well, I don't know. I'm not sure if I understood the question correctly, but essentially when you're applying for the PPP loan, you are attesting to the fact that there is a hardship that you're experiencing due to COVID-19, right? And that's why you're applying for the loan. The recent guidance that came out was that for any loan amounts that are less than $2 million, the government is not going to challenge you to prove that you had a hardship. They're going to take your word for it. However, in that same guidance, it does not preclude you from future audits. in case the government wants to go back and check something that for some reason comes up to their radar. Your application was fraudulent, it's gotten out. Again, does not say that you're completely exonerated from future audits, but they do say that they will take your word for it that you have a financial hardship, because they assume that the companies are requesting loans in the amount of less than $2 million don't have easy access to other to capital markets or other access to capital. So I guess the short answer is, if you have a hardship now, you can apply for the PPP loan, and if it's less than $2 million, the government, the SBA, will take your word for it that you did have economic hardship and you needed the money.
Okay, great. Thank you, Raf. We have a question. What documentation do I need to submit if I've been granted a PPP loan based on my 1099 income? Lisa, who asked that question, we had that information in a previous slide, so we'll be posting the slides and sending them out to all the attendees of the webinar. But also in the handouts, there is a handout which is the SBA PPP Forgiveness application. So that will have the documents listed as well. You can just click on that application. I think this was just released today or yesterday, but you can just click on that and see the documents needed. Rafael, oh, I apologize. We have a question. Our company received a small amount of money from the DC Small Business Micro Grant. To receive the money, they require that a form that asks what the money is being used for. Is it important not to include any expenses that fall under eligible PPP forgiveness expenses during the 8-week period to make sure that they're not double dipping?
For the DC loan?
Yes, it was for the DC Small Business.
Yeah, I'm not familiar with that program at all. I know that a lot of local governments have loan programs or grant programs out there. And the general rule of thumb is not to double dip, right? So if you're using funds, if you're using PPP funds for one thing, you shouldn't be using a grant money from another organization for the same thing if that's what they explicitly put out there in their application. Similar to EIDL and PPP, right? The guidance was, 2 separate loan programs, don't use it for the same thing, and you can still apply for both. So I think that's the general rule of thumb. Although you may want to check in with with whoever the administrator is for that DC program and just have a conversation with them about that question.
Okay, great. Thank you. Let's see. All right. Let's see. We had some more questions here. So in terms of mortgage interest, Rafael, I'm sorry, this is for Eric. Eric, what would count as mortgage interest?
Well, interest that you're paying on any business assets. At first, the language seemed to be just clearly mortgage, on a real property, but the way I understand it, it's expanded to be any business property, whether it's vehicles, building, even to the point that I don't have a clear answer on this, but reading it, it almost looks like you could use it for any interest expense, even loans that aren't tied to an asset. But that's just the way I was reading it. It seems that way. Once again, the spirit of the law here seems to be making payments on fixed assets. I don't have a very clear answer for you on everything you could spend it on, but it seems to be very clearly real property and business assets that you've bought. And, those seem to be a slam dunk. As far as other interest payments, I don't have a clear answer. Raf may.
Eric, I think that's pretty.
Yeah, and I think what we've seen over and over again is the guidance is not crystal clear on this because it can't be because there's so many unique situations. But what is very clear is the general guidance. So like you said, there are certain things that they said this is what you definitely can take, and there's other things that can be gray. And the things that are gray, if you take them, you run the risk of not having that part of the loan forgiven because they have not given clear guidance on those things. So people, of course, you do want to stretch this out as much as possible, but just be aware that they're not giving guidance on those things, and they might rule against some of those things being approved. Anything that's not given clear guidance.
So one example that I've seen on this, Darren, a couple of times recently is S corps that have loans from shareholders. The shareholder has made a loan to the business and has a loan document written up with an imputed interest on it, and they've asked, can I pay this loan? Does this interest count? Well, they're essentially paying themselves their own loan back. The law, the way I've written it, interpret it and read it, doesn't specifically say you cannot do that. But once again, you're getting into the intent, and like Raf just said, you're running the risk of down the road of a regulator saying, no, you can't pay your own loan back, and it's not forgivable. That's just one example I've seen recently.
Okay, thank you, Eric. Raf, we got this other question. Do you know if there are any plans to allow those businesses that received the PPP to apply for another wave, as they've now used the 8 weeks of money? So if there is another wave of loans, do you know if they'll be able to apply for that second wave?
If they already have a PPP loan?
Yes, they've already received one for the 8-week period.
The current guidance right now, Darren, is one PPP loan. You can't have multiple PPP loans. That may change depending on the dynamics of the economy as we start to reopen, whether or not things get back on track. There's a second wave. But right now, we haven't heard anything about a second PPP loan being authorized. What I would recommend for folks that are looking for additional funds or additional resources is to check in with their local county, their local government. Fairfax County, Arlington, they have fantastic grant programs or low to zero interest loans that can be used. They have their own regulations and guidance and on what they can be used for and what they can't be used for. If you have a PPP loan, can you apply for that? They all differ, but there are other ways to access capital. And do keep in mind that EIDL is still out there. Currently, it still has some restrictions because there's such a huge backlog. But I did get a note this morning from our SBA chair that EIDL backlog is getting cleared through. They've hired some more folks, dedicated some more resources to get that through. So that should be opening up to the general public once again. So to hopefully provide another source of capital for businesses that really need it.
Okay, great. Thank you, Raf. Thanks for that feedback. We're getting ready to, we're nearing the end of the webinar. We do have a lot of questions that still are unanswered, and what we're going to do is answer those in the follow-up article that we're going to send for the webinar recap. Eric, looking at the questions, are there any questions that you want to answer before we finish, or should we reply to those in the recap article?
Well, there's so many. I've been looking down through them. I think a lot of them, the vast majority so far, we've covered. I'm sure there are some in here that we have not, but nothing is jumping out at me right now.
Okay, then we'll answer those questions in a recap article. So here are some resources that are pretty helpful. The Paycheck Protection Program Treasury updates is where all the guidance comes from. So this is a very important site to go to. Also, the SBA forgiveness application is attached to it's a handout in the webinar, so you can just download that directly. That's a very important, or that's really good just to become familiar with. You still have some time. It'll show before the application needs to be submitted for forgiveness, but you can look at what documents are required. You can look at how that application is going to look. So that's very useful. Rafael, Eric, is there anything else that you would like to add that we did not mention during the webinar?
Well, Darren, first, I just want to thank you for inviting me once again. I think the continuity made a lot of sense since we were the ones that kicked off the how to apply for PPP PPP webinar. These are some interesting times, some trying times, but we will all get through this together. Communicate with your bank or your banker. Be on the lookout for communications that are going to come from your financial institution on how they will process PPP forgiveness. Not every institution will do it the same, so make sure you have a clear understanding of how that will work. And these are times for you to reflect and really see the value of relationships with an accounting firm, a bank, and a banker. And if you didn't like how things went through PPP, now may be a good time to reevaluate those relationships, because it's important, especially when you need some help in uncertain times. So again, thank you for the opportunity, Darren and Eric. Very good stuff here. Again, I would recommend everybody take a look at treasury.gov. There's a slew of resources out there. I know it's a lot of information to digest, but ultimately it's your responsibility to understand what you need to provide in order to receive forgiveness, and what won't be qualified for forgiveness, and making that calculation as to whether or not you can afford to take out a loan for that has to be repaid within 2 years' time. So anyway, lean on your professionals, your financial professionals for guidance. We'll do the best that we can. And again, good luck.
Yeah, and Ralph, thank you so much for participating in this webinar. You know, I said this last time as well, and we always say this because we're always happy to recommend Ralph and Atlantic Union Bank, but it's so important to work with a good banker that you can communicate with very easily, is very responsive. That's very important, and obviously in times like this, but even in times not like this, it's always very important, especially if you're a growing business, to have a banker that's very responsive like that. I will say for everybody that, again, the guidance is changing, so we will be posting articles as the guidance changes and sending out updates, but just be aware that it's probably going to evolve a little bit more. And, you know, if we see that there's enough evolution that it requires another webinar, we will create that. We'll prepare that webinar. But for now, this is the information that we have today, and we hope it was helpful. And thank you, everybody, for attending. We really appreciate your attendance, and also appreciate what you're going through as well, you know, maintaining your business during these difficult times. Just as a follow-up, I will be sending out the webinar recap, which will include the slides, a recording of the webinar, and also all the questions that were answered that we did not get to specifically, because there were some specific questions answered that we weren't able to answer during the webinar, but we will send those out in the recap. And if you need to, and I will also send out Rafael's information if you need to contact him at Atlantic Union Bank. And of course, we're always available to answer questions, specific questions relating to your specific situation. So thank you very much, Rafael. Thank you, Eric, for participating, and thank you again, everybody, for being part of our webinar today.
Excellent. Thank you very much, everybody.
Thanks all. Take care.